Himanshu saying, hi, first time here in co-trading workshop session, joined CTF a couple of weeks back. Struggling to understand VSA, joined today to know how much VSA based analysis get discussed in CTW sessions. When I started learning all these things, what I found out was that I incidentally came across VSA before I ever heard about market profile. So I used VSA for some time, then I gave up on it and I was combining it with Elliott wave and I was doing 100 different things. Then I came across market profile and everything changed for me because it completely changed my perspective on markets. Not the first time though. So I also gave up on market profile too. I started using market profile and then I gave up on it, went back to the Elliott wave and other things, and I was basically very very bad trader. I was just a newbie and I was struggling like anything. I was jumping around from one method to another. Then I again came back to market profile and I gave it almost 1 year. I did nothing in that 1 year. I just simply observed the markets and nothing else. I did not trade. I did not do anything else. I did not even look at other charts. I just looked at market profile charts, and then things started falling into place. Then further on, I realized that when I looked at auction theory, which Jim Dalton suggested is what market profile is based on as per Stadelmeier, then I read his books and I understood a few things. Then I came across Wyckoff, which I knew a little bit earlier when I studied VSA. Tom Williams, of course, was a student of Wyckoff market analysis, Wyckoff method. So I studied that in some detail. So that also gave me some perspective. And then what I realized is that there is a clear progression, all right? You start with first learning some basic stuff or philosophies that underlie everything. Okay, so when you learn Wyckoff, when you learn auction theory, when you learn the 4 steps model, when you learn the innovation adoption curve, what you understand is that this underlies the trader behavior overall. And once you understand those things, then you can build on it using any tool that will give you deeper insights, that will help you monitor all those philosophies in real-time markets. Alright, so when I say auction goes down to find buyers, how does it look on the chart? How will you understand that? That you need market profile where you see that, okay, trade facilitation is good to the downside, range extension, IB range extension, value area forming lower, nice price coverage is happening. All these are signs that are telling you that this auction has not yet found buyers and it is likely to go even lower. The second step is to use tools that will help you observe all these core philosophies in real-time markets, and then comes the concept of timing your trades. Now, at the moment I was using VSA extensively, so I incorporated VSA into the system. VSA in itself can be used as a complete trading system. You do not even need market profile. Why? Because VSA has volume profile in it. So you can simply look at volume profile, VWAP and VSA, signals what they are trying to tell you, and then you can simply trade based on that. That also is a method in itself. But now what is happening is, I realized something more, and that was time frames. And time frames decide how long you hold on to a trade. If you are a short-term trader, then probably VSA will help you, order flow will help you. But if you are a short swing trader where you are holding your trades for 3 to 4 days or even more, then these short-term timing tools are not very important. Yeah, when you want to enter, probably you can find a good entry point using these tools, the intraday trading guidelines. But if you are not trading intraday, then they are not very, very essential to your success. You need to understand. Now, this VSA can be applied to higher time frames also, but I prefer, use market profile for that medium to short-term, short swing kind of context. And then if you want to trade even lower time frames, then you can go and use VSA. So here you can see we open higher. Definitely the value is likely to develop higher, because we are sustaining higher prices. So what you expect? You expect the prices to go and then come back to VWAP, where the cumulative delta is positive, prices are above VWAP, value is forming higher. Then you buy all the pullbacks to VWAP. So how will you buy the pullback? What are you looking for when you are trying to buy the pullback? Alright, you can use price action, simple price action rules you can use, or you can use VSA in this case. So let me show you how you can use VSA. So what I said, you can use the sequential setups. What they tell you, let me show the chart. So what they tell you, this is the day I'm talking about. Alright, let me reiterate why. because here the opening was higher, so the value was likely to develop higher, and then we were sustaining higher prices. So now the intraday trading guidelines tell me to buy pullbacks to VWAP. Alright. So how do you buy that? That is what we are trying to learn here. So you can see we slowly come back to the VWAP. Now you have sign of strength, test, test. So you can buy that. Sign of strength plus test. You can also argue that there is this confirmation plus test. How? You can see here sign of strength. Then we move higher. We show some intention to move higher. There is also a test here. Then we come back and we give another test closer to VWAP. You can buy here. And then market goes higher, you can sell. You can first, you have to exit at a predetermined 1:1 kind of target. So let's say you buy this test or this test. So this is your stop loss, and equivalent amount of first profit target should be used. 50% gone. Then you put your rest of the trade with a stop loss at cost, takes out here. Is the logic still holds? Are we still moving higher? Yes, the VWAP is flat to slightly rising. So when it comes back to VWAP, again you can check for sign of strength and test. You can buy here, put your stop losses. This is the recent swing low, or maybe 30 points, whatever your bank nifty, it might be a little more. So whatever your regular stop losses, and then it again goes back up. You can use VWAP, alright? You can use VWAP to position yourself for intraday trades if you want to take intraday trades, or you can use any simple price action setup, or whatever you want to use, whatever you are using earlier, that gives you good entry and exits on shorter time frames, and then you can filter those entries and exits using intraday trading guidelines. So let's say the value is forming higher but price is clearly below VWAP, you are not allowed to take longs, and no matter what pattern is forming, no matter what signal is coming, you are not going to take longs. And you are also not shorting because the value is forming higher. So that is a no trade day kind of a situation, and you avoid that. And in the long term, avoiding these